Yeah, it's been pretty patchy, and in fact, India sticks out a little bit as a bit of a tall poppy in some sense. Many of the markets are sort of concerned, or investors in those markets are concerned about the specter of deflation. We haven't really seen the impact of stimulus measures really coming through in any meaningful sense, and I think the latest numbers that we saw yesterday on Japan is probably going to dent investor sentiment generally, that the BOJ, despite a significant amount of stimulus being applied, the economy is still not really responding. So India sticks out a little bit. Of course, we've still got the reverse in some ways, if we've still got some inflationary pressure coming through in India, which should ease with lower oil prices. But as a result, and with some evidence now that the reforms are starting to be implemented by the administration, I think as we move into next year, we're likely to see earnings expectations start to push out a little bit, some revisions upwards. And therefore, I think that positive flow in favour of India is likely to continue. Yeah, so far Abenomics has disappointed on many levels, and the real issue here is we haven't seen the significant follow-through in the reforms that are required to try and kick-start that economy. Of course, it's always going to be a difficult path to try and reverse those deflationary trends of the last 20 years and the ineptitude of previous administrations. But I think the timing of the tax hike, the sales tax hike, occurring when it did before the economy really found its feet, has pushed back the pace of recovery. And I think if we look at the market today, there's wide expectation now that we're going to have a snap election around the middle of December, that the next sales tax hike is going to be deferred, and it's likely, if we see Abe get the mandate that he's looking for, possibly an acceleration in some of the next steps that need to occur around that third arrow in terms of reforms, and therefore hope that the economy will push on. But in the meantime, of course, with the BOJ really priming the pump and expanding its balance sheet, and at the same time the GPIF, the National Pension Plan, the largest pension scheme in the world, shifting assets away from government bonds and into equities and into overseas asset classes, this is likely to support the Japanese equity market a little bit longer, and we've seen the recovery today on the back of that speculation.